Markets wrap up worst year since the financial crisis. The markets around the world have faced a challenging year, but it's important to understand why it happened and what we can learn from it. In the US, the Dow Jones experienced a decrease of nearly 20% at its lowest point. The FTSE 100 in the UK fell below 6,000 points for the first time in almost 7 years, and stocks in China are down more than 40% since last summer. It's important to stay informed and use this knowledge to make smarter decisions in the future. 1. The market is still vulnerable to global economic developments. Despite the market's recovery from the 2008 to 2009 crisis, it's still important to protect your portfolio from potential global risks. Here, we explore 3 ways to do just that and ensure the value of your investments is safeguarded. Payroll growth is dependent on the performance of the U.S. economy. The U.S. economy is the primary driver for local stocks, and the U.S. Federal Reserve has been successful in bolstering the economy with low interest rates. If the U.S. economy continues to see strong growth, the Fed may need to raise interest rates to prevent the economy from overheating. But if the market experiences any hiccups, the Fed will be ready to cut rates to help stabilize it. Ultimately, the market's performance will depend on the performance of the U.S. economy, which is looking very promising. Decline in the U.S. dollar could support the local currency. The Federal Reserve has hinted at a possible rate hike in September, so it's worth keeping an eye on how the U.S. dollar performs and how the Fed responds to the current global economic environment. Although the market is still vulnerable to global economic developments, there are plenty of opportunities for savvy investors to take advantage of. 2. The Dow Jones Industrial Average has been among the worst performers in 2018 despite some turbulence. The Dow Jones Industrial Average has had an impressive year in 2018. The index is up more than 10% this year and is on track to record its strongest December in a decade. This comes as a result of a strong rally in U.S. equities and a weakening in the U.S. dollar, despite it being down more than 4% year-to-date. The Dow Jones Industrial Average is currently down almost 6% in 2018. The Dow Jones Industrial Average is down almost 6% this year, but many of the other major indexes have seen more positive performance. The S&P 500, Nasdaq 100, the Russell 2000, and the Dow Jones Transportation Average are all down less than 5% each this year, while the Dow Jones Utility Average is down only 10%. Meanwhile, the Dow Jones Composite Average is up an impressive 6.9% so far this year. This is the worst performance by the index in the last 2 decades. The Dow Jones Industrial Average, an index that tracks 30 large companies, has experienced some challenging times in 2018. Although the index has lost more than 4,000 points since its peak in January, a drop of more than 40%, the long-term outlook remains positive. The recent dip in the index can be attributed to 2 main factors: the interest rate hike and the trade war between the U.S. and China. With the right strategies in place, the index can regain its value and reach new heights in the coming months. The Dow Jones Industrial Average is considered as a good indicator for the economy. The Dow Jones Industrial Average is an important measure of the overall health of the economy. It is composed of 30 of the largest companies in the U.S. and serves as a reliable benchmark for the stock market. Even though 2018 has been a challenging year for the Dow Jones Industrial Average, it has seen some growth in recent weeks. This is why it's important to stay informed about the Dow Jones Industrial Average, especially if you're looking to make investments in stocks. The index is traded at the New York Stock Exchange. The Dow Jones Industrial Average is a great indicator of the U.S. economy and is traded on the New York Stock Exchange, the world's largest stock exchange. Made up of 30 of the largest American companies, the Dow Jones Industrial Average has been a reliable source of information since its creation in 1896. With the Dow Jones Industrial Average, investors have a great tool to track the performance of the U.S. economy. 3. The S&P 500 and Nasdaq 100 are down more than 10%. The S&P 500, Nasdaq 100, Dow Jones Industrial Average, and the small-cap Russell 2000 have all seen dips of more than 7%. While the Dow is 1,000 points off its record high from late January, this could be an opportunity for savvy investors to buy low and reap rewards in the future. With this in mind, the question on everyone's mind is when the market will turn around and start growing again. The 2 indexes are down 8.8% and 9.6% respectively. The S&P 500, Nasdaq 100, Dow Jones Industrial Average, and Russell 2000 are all down by more than 5%, providing an opportunity to find stocks that have been oversold. When the market falls, it's important to remember that the indexes are not the only stocks that are affected. By using the Nasdaq Composite Index (CN) (ICSIC) as a guide, you can identify stocks that are similar to the ones that are most likely to fall and invest in them for potential upside. With over 3,000 stocks included in the composite, it's a great way to get a comprehensive view of the market and make informed decisions. The markets are due to a global trade war that has affected several countries despite the S&P 500 and Nasdaq 100 being down more than 10% from their record highs due to global trade wars. There are still plenty of opportunities to make the most of your content marketing strategy. Local news is a great way to promote your company and show your customers that you're invested in their success. Keeping your company's story front and center is essential, and local news is a great way to do just that. Some experts say that the trade war could affect the United States economy in the long term. The United States and China's ongoing trade war has many people wondering how it will affect the economy in the long term. While some experts think the tariffs could cause an economic recession, there is also potential for positive outcomes. The tariffs could encourage companies to invest in domestic production, creating jobs and boosting the economy. They could also lead to increased innovation and increased competition, driving down prices and making goods and services more affordable for consumers. If the trade war is managed properly, it could be a great opportunity for the United States to strengthen its economy. 4. The US dollar is at its strongest since April. For the past couple of years, the US dollar has been on a steady and gradual decline. This presents an opportunity for those living in the United States, as well as businesses operating in the country. Read on to learn how to take advantage of this trend and make the most of it. The dollar is up too. If you're traveling to the States soon, you may want to consider bringing some extra cash with you. The Wall Street Journal recently reported that the dollar is currently at its strongest point in over a month, thanks to a variety of factors. This is great news, as it means that you can get more for your money when you travel. It's important to stay up to date with the current trends, however, so that you can get the most out of your money. Conclusion: global stock markets had a challenging year in 2018, but the US dollar is at its strongest since April. This is a great opportunity to invest in the stock market and take advantage of the potential for growth in the coming year. With the right strategy, you can make the most of the current market conditions and build a successful portfolio.